Hey guys.
Hey guys.
We recently made a video on how to invest for the long term to one day become a millionaire, okay? And somebody put up a comment on our channel that we thought we'd respond to today. We'll put this up on the screen for you guys to see. And the comment said, but you might invest it and lose the money and have nothing at all. Okay?
Yeah.
And
That's so valid, isn't it?
Yeah, and we felt this is such a valid response. And by the way, thank you for commenting on our videos. So we thought, you know what, let's make a video today and explain why people lose money when they invest it in the stock market. The whole point of this video is to then help you gain a lot more comfort when it comes to investing in the stock market by not making some of these mistakes that we're going to be outlining today. Okay, so today's video is super casual. If you're really enjoying the vibes in this video, we'd really appreciate it if you hit that subscribe button, because that just helps get our videos out to a lot more people in order to help them as well.
And if you're new to this channel,
my name's Ken.
and I'm Mary of the Humble Penny and Financial Joy Academy. And what we do on this channel is to give you the tips, the insights and the practical hacks to help you take control, grow your money and work towards the dream life of financial independence and money joy. Okay, let's dive straight in.
Awesome. So here we go. Okay. I want you to just react as well as you're watching this, right? If anyone really resonates for you, let us know in the comments, okay? So here are the reasons why you keep losing money when you invest in the stock market. Idea number one, here's reason number one, is that you keep giving your money to other people to invest for you.
Yeah, we hear this a lot.
Yeah, we hear this a lot. Now, this goes as far as like random strangers. You know how like we've made this video, you see people in our comments pretending to be us, for example.
Yeah.
Pretending to be the Humble Penny, saying to you, oh, send this message to this WhatsApp message, messenger thing, and so on. And a lot of people fall for this thing. So first of all, there's people who are giving their money to random strangers who are promising them the world, and they lose their money that way. That's the first thing. Then there are these so-called financial advisors who basically recommend a bunch of products that you might not even have done any due diligence on. I know someone from our community. Yeah. You might remember from one of our coaching calls where she said, you know what, she invested in this fund in like Switzerland or wherever. And unfortunately, you know, money has been lost, and significant amounts of money. Yeah. Okay, this is why we're trying to empower people on our channel to basically acquire the skill set that's necessary to run your own race and invest your own money yourself. Okay, and not knocking financial advisors, by the way. I should mention there are people who need financial advisors who've got very complex financial situations, so they may need a financial advisor specifically. Okay, then the final one tied to this whole you giving your money to other people is like, you know, when people talk about like pyramid schemes and they're like, oh yeah, if you put 10k in, like, and then everybody puts money in, and then like the people who put money in first make the most money and get their money out. There are all these schemes out there that are there that promise you crazy returns, and a lot of people actually lose a lot of money.
They do.
For the promises of great riches that never, a lot of the time, materialize.
All right, so another reason why people keep losing money when they try to invest is that you're trying to time the market by picking individual stocks.
Big one.
Now, if you haven't done any analysis on an individual company, then don't bother investing in it.
Yeah.
And if you don't know what the bottom of the market is, why are you trying to time it? Nobody knows.
I know that sounds like it's such a no-brainer. It's like people say, I'm waiting for the bottom of the market.
But nobody knows the bottom.
But where's
you know
where's the bottom? Is there like, do you get a text message, like a WhatsApp or a notification that goes, oh, we're at the bottom now, time to buy.
Yeah.
Like, no one knows.
No one
so
knows.
why, you know, anyway.
Yeah, and finally, like if you must invest in individual stocks, then maybe make it a small % of your investment portfolio that you will put towards that if you have to, especially if you don't know what you're doing.
Yeah, and I think that's actually a good, sensible thing, right? Because some people just have the urge to invest in individual stocks. You go like, oh, I like Apple, so I'm going to invest in Apple stock. That's great.
Fine. Make
that's
a small
great,
percentage.
right? You know. Apple's great stock, by the way. But all right, next one, and this one's gonna hit. This is gonna hit for people. Is that you keep taking tips from random social media influencers?
Oh,
this one's gonna hit. And here's the thing, right? In today's world, anyone can pick up one of these things and start talking about their investing. Yeah, they might show you like they're behind the scenes. Look at my portfolio. Look how I'm doing, or whatever, right?
Which is nice.
Which is nice to see. But a lot of people are actually losing a ton of money being led. It's like, sheep leading sheep into slaughter.
Ouch.
A lot of people are losing money.
Yeah.
A lot of people. So you have to ask yourself, the people I'm listening to, and the point I'm making here is the point about listening to too many people.
Yeah.
Because the problem with social media and having platforms is basically everybody's talking all the time.
There's a lot of noise.
So you're actually better off choosing a handful of people that you listen to, that you've actually checked out. I mean, I use this as an example, and this is not by no means bragging at all. I think you should be asking yourself, if people are talking about investing, what track record, what background do they actually have? I'll just talk about myself and Mary, for example. I've worked in investment business. I don't work there anymore, but I worked in investment business for 14 years.
That's a long time.
14 years. Everything from asset management to venture capital to building these products that people invest in to doing the behind the scenes, the things that you see that might become ISAs and things, actually building them and creating them. So you have to ask yourself, the people you're listening to, what is the credibility? Beyond us investing our own money and building wealth out of doing it, what is the credibility? And I think that's very important. Yeah. And the final thing I'd say on this social media thing is, honestly, I'd go as far as just unfollowing people who you think are just leading you astray. Be direct. If you don't believe that people are actually giving you there's meat on the bone. Meat on the bone. I don't know what the saying is, right? If you don't believe that there's substance to what people are doing, then stop following people, man.
Ken chose violence today.
It's not violence. I'm just being real. This is a casual video. Why do you listen to people who are just chatting rubbish in your ears all the time?
Very selective.
Just unfollow those people, because believe it or not, there's a very direct correlation between you choosing to follow certain people and you getting poorer over time.
Yeah, it calls for wisdom.
Bad advice, man.
Yeah.
Bad advice, because a lot of this stuff's not regulated and you can be seriously misled and led astray.
Yeah.
Okay,
that's serious. For a lot of wisdom and discernment.
That is serious. Right, what's our next one?
Okay, so the next one is that you're thinking short term. Don't bother putting money into the stock market if you know you're going to withdraw it in 12 months' time. There's just no point.
Yeah.
And another thing, stop trading. You're not an expert. And the people who are telling you to trade, they're probably not making money from trading themselves.
Yeah.
You'll likely lose your money from trading. And let's be honest, we're going into 2023. We don't want to be losing our money from trading, because it is very hard to make money from that.
Yeah, I'm just saying it. And I've said this before on this channel. I used to pay traders, so I know that business very well. And
what were you
a lot of them would run dry for months. They're basically not making any money. They have losses on their books. And then one day something will hit, right? And they'll make some money. And these are the people who are professionals. These are people who are paid. It's like their day job. They've got a contract of employment that says you are a trader.
Whether they lose money or not, they still get paid, right? Their salary.
Some have a small basic, but then most of the money is made from commissions that they get paid from their trading activity. But for regular
people, they don't have that basic.
Yeah, exactly. They don't have that basic to fall back on, right? And so you could easily get promised do this one course and things will take off for you. Yeah, it doesn't work. Well, we know so many people who've done these paid grands. Nothing's happened.
Yeah.
I don't mean to laugh, but that's the reality of it. That money's gone flush down the toilet. Yeah. All right, next is you keep investing with no risk management. We spoke at an event recently, and there was a young guy who came to speak to us. He's a Gen Z, so in his early 20s, and he just opened up. He just said, look, guys, after listening to you guys, I just felt I needed to say this, but I love what you said, really hit for me. And I wanted to just say that I've lost around £20,000 by putting all my money in crypto.
Damn. And I think the reason why he spoke up is because we said that, you should, if you do want to invest in crypto, then that's fine, but it should only be 5% of your whole investment portfolio that you should be putting to.
And I never forget us saying that. And I remember someone in the comments going, 5%, ha ha ha. More like 50%, that person said. And I bet they're not saying that at the moment.
No.
But anyway, coming back to this guy, He said that he basically lost all his money. It's very sad, actually, because he's a young guy in his 20s.
And he'd saved, like, how much of it was it that he
lost all his money.
20K.
20K. And he said he was basically using crypto as his bank account, as his savings account. That's how he looked at it. So basically everything, 100% went into crypto. And this speaks to, it's a generational thing as well, in that, like, where you're born into a world where post-COVID, a lot of people are just using their phones. All these investment companies were really just all about hoovering up young people's money, right? Because you have to ask yourself, where does that money go? Like, when you've lost it, where does it go, right? It goes to companies, fees, things like that, right? They make money all the time. So he lost money because he put all his money, all his eggs into one basket. This is the point about risk management. The point we're making here is you can reduce your risk by diversifying. So where Mary was talking about 5% maximum, what we're saying there is if you're going to explore those slightly exotic investment options, then you want to try and reduce the exposure a little bit, particularly if your risk appetite is not that high, right? Okay. And that's why we, particularly on this channel, talk a great deal about investing in passive trackers, so your index funds, your ETFs. We'll talk at length about them. If you're new to our channel, we're linked below and above to a bunch of videos for you to go and check out that will help walk you through step by step how you can go about investing. And the reason why they matter, actually, because it might sound very like blasé saying investing in index funds, ETFs. The reason it matters is because your money is actually spread across thousands of companies in different parts of the world, across different industries. So that means that, because there are different companies operating in different industries where one is going down, another one might be going up from a risk perspective. Well, if things are from a volatility perspective, that variation in volatility works in your favor because it reduces the specific risk that you have to a particular company.
It balances.
So it balances things out. Okay. The other thing I wanted to mention when it comes to idea of investing with risk management, which is what you're meant to be doing, is don't be afraid to introduce some bonds, particularly if you have an attitude to risk that's not like super high attitude to risk. Or if you are not in that kind of wealth accumulation phase where you are like, do you know what? I'm in kind of like wealth preservation. I kind of want to look after my money. Don't be afraid to introduce certain elements of bond investing into your portfolio, because that just helps to, lower the riskiness of equities. Yeah. All right. What's our next one?
So the next one is they keep waiting for the stock that will go to the moon. Stop taking investment advice from the Uber driver or your mom or your aunt or whoever for that matter. Yeah. Unless, of course, they have a proven track record of success in investing.
They were like, no one even knows. This is the thing. Yeah. No one knows, right? Unless they give you advice that's not like a tip, like, this might go to the moon. Like, people who really know, the people who really know, for example, the board of directors of a company, the chief financial officer, people like that who have like effectively inside information about a company, and they kind of know like the fundamentals and know information that the public don't know and stuff like that. Yeah, so anyway, you get the point. You kind of get where I'm going with that.
Yeah. So basically, there's always going to be a FOMO. There's always going to be, noise and whispers of like this new exciting investment that's going to go to the moon. Just avoid FOMO and you'll be fine. As long as you don't like fall into that trap of, oh my gosh, I don't want to miss out on this great opportunity. You'll be fine.
And there'll be lots of FOMO.
There will be.
A ton. And this connects to our point number 7, actually, which is that you keep acting on the news and selling your investments. Yeah. Here's the thing you need to understand about the news. Yeah. First of all, the news is a business, right? That's why like they've got like people who built empires on the news. And the reason why the news is obviously business is because it appeals to our fear instincts. Yeah. The news targets our fear instincts. So no one talks about anything positive, anything good news. Yeah. It's all about the negativity, like doom, 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 doom. Like doom.
Breaking news.
Breaking news. It's like, why is it breaking? What's happening? It's breaking, right? So that's why, because they're targeting our fear instinct. So you have to always ask yourself, like, who is the news really for? Like, who is it really for? Who's actually benefiting from us being told, oh, stock market's crashed and all this stuff? That's because they want you to go and do something.
Or do nothing.
No, wait. No. They don't want you to do nothing. That's like, that benefits you. Because if you do nothing, that's like, investment companies are like, what? We're making no money. But they want you to do something, which is, I'm going to go and sell my stuff right now.
Yeah.
Because I've just heard,
of course,
the world's falling apart.
Yeah.
Some things happen in that part of the world, and it's like everything's falling apart. So I'm going to go quickly. Take my thing out.
So.
Press the button.
But they also don't want you to buy when the stocks are low.
Investment companies want activity. Whether you're buying, whether you're selling, they're making money. The whole point is, every time you buy something, every time you sell something, money is being made by somebody. It goes into someone's balance sheet, into the cash balance. Yeah? So you have to remember that. So the point we're making here is stop selling your investments when you hear the news. Because, like, what's the point of listening to us? And we talked about long-term investing. The whole point is long-term is long-term. Stop being knee-jerk. Stop, like, being reactive.
Yeah. And,
like, stop, like, listening to too many voices. In fact, I heard one stat ages ago. They said, they did some research a while back there. This is in America, but the point is the same. Which is, they found that the best investors by returns when they did this research are basically dead people.
Oh, I thought they were going to say women, but okay. That makes sense.
Yeah, could be. And actually, I think women are actually way better investors than men. But anyway, just you guys, you're more likely to kind of go, what should I do? I'm not sure if I should do it. And you're more likely to hold off.
Slightly risk
men will go like, do you know what?
Let's do it.
Press the thing.
I think we're more risk averse, but we also do our due diligence for investing. So.
Yeah. So, but what they found was that basically people who basically had forgotten their login details to their investing apps were the people who were like, their performance for their investments had performed like way better than compared to everybody else. Because each time you're buying and selling out, you're paying these dealing fees, you're paying trading fees. And like I said to you, because I used to work in the investment business, my job as a head of finance, in the company was counting up people's fees. Like, the job is, okay, how much have we made in trading fees this much? Like, people buying, selling. How much have we made from stock lending stocks for traders to go and short stocks. So you have to understand that the other side of the picture, the other side of this computer screen, is a CFO or a finance head or a director of finance, somebody sitting there waiting to collect all that money. Stop selling your stuff.
You hear that, guys?
Stop selling it, right? Think long term. And you build real wealth.
Yes.
I want to just wrap up this video by saying, keep an eye on fees, because although we've touched on many other areas, we made a very detailed video, by the way, which actually I'm going to link to below above, about fees. Fees represent a very silent way in which your money is being taken away every year.
So true.
Very silent. You never notice. It's like, in fact, no one looks at their statements.
Unless you pay attention to the fees.
But most people don't look at that stuff. Most people don't even look at their home bank statements, let alone their investing company statements. Like, no one.
Guys, let us know in the comments. Do you pay attention to the fees in your investments before you make an investment? Do you pay attention to the fees?
It'd be good to know. But the point is, please pay attention to fees. In all seriousness, it does matter when it comes to building real wealth, not just for you and this current generation, but for the generation that will come.
Guys, we hope you enjoyed that video. It was a bit full on, but sometimes we need to just tell it as it is, because there's people out there losing money and it is not cool.
It's not funny at all.
Especially our friends, family, like people close to us. We don't like that, and we don't want that to be the case for you as well. So if you did like this video, guys, please hit that like button, share and subscribe if you haven't done so already. It really helps, and encourages us to keep doing what we're doing.
Yeah, we need encouraging.
We need encouraging, don't we? Yeah.
Share this video far and wide. We make it because we really care. So please share it with other people who might find it useful. But other than that, thank you guys so much for watching today's video. And as always, in all things,
be thankful and seek joy.
Take care, people. Much love.
Bye.
Bye.